What's going on, people? So I wanted to update the education tab, so I'm going to go through step by step a lot of the things. First thing to start off with, one of the things I think is the most important is the Candlestick Trading Bible, and it's really about understanding the approach, the perception of the market that the Candlestick Bible takes, taking in the information that it talks about and how price acts within certain conditions, and how market structure should be formed, will allow you to be able to identify a lot more when you're looking at graphs. And from starting your trading journey, that's always one of the most important things, because everything is new. You've never seen what you're looking at before. You've never experienced how a ranging market will continue over a period of days, and you can sell at the top, and buy at the bottom. So reading this book would allow you to get an insight onto what that kind of looks like, and also teach you about taking action on that, how to execute that. I truly believe that if you study this book religiously and you do actually know it in depth, that you'll be able to take that into your trading. So if we take the look at the overview of the book itself, I'm going to make this a quick video because, again, I can't have long videos uploaded into the Discord, so I'm going to do a quick one. This ebook is divided into the following sections: candlestick anatomy. Just as humans, candlesticks have different body sizes, and when it comes to trading, it's important to check out the bodies of candles and understand the psychology behind it. That's what you'll learn in this section. Basically what that means is that the candles themselves are formed in certain ways, and when they are formed, they're all different shapes and sizes. We all know that this is the hour time frame, so these are hour candles, but they're all different shapes and sizes, and they all say something. Now, the way that they're built, the way that the candle finishes, the anatomy of it, can tell you information, and it's going to be crucial for you as a trader to be able to translate this information. That's what we focus on at the start, and it looks a lot of like patterns. So you'll notice that it will tell you about how candles open, that a bullish candle opens at the bottom and closes at the top because the value opened here and ended higher, so the value increased in that candle. Yes, there's wicks, that means the value was once here but it closed here. That's where it closed. It was once here but it closed here. It closed higher than the open. Again, with the sell candle, it opened at the top and it closed lower. It was once here, it was once here, but it closed here lower than the entry. So it tells us this information, and it's important to really get on top and understand candlestick anatomy. I talk about it a lot. The biology and the anatomy of the candle will show you the psychology of the market, and that is what this was identifying, really, the psychology behind all traders in the market. You can kind of be ahead of what a lot of traders will be thinking, because the information is being displayed by the candles. Again, similar with candlestick anatomy, you have candlestick patterns. Now, the candlestick patterns are an integral part of technical analysis. Candlestick patterns emerge because humans' actions and reactions are patterned and constantly repeated. So this is more looking at that psychology sector we was talking about. The traders that are in the market, when they see a huge candle with huge rejection like this and a big bearish pin bar, then they start to think and believe the sell. So eventually the sell happens because the amount of people are backing the sell. If you think about it, weights the scale. If there are more people on the selling side, of course it's going to tip that way. So again, people read into these candles, and it can also reveal the psychology of the market. When everyone was up here, they were saying this is way too high, so let's sell it because we know that it will return back to these values down here at 11,700. So when we touch 12,000, everyone would have been saying, okay, let's sell, let's sell, let's sell, bring the value down. More sellers got into the market, we came back up. Buyers got back in to bring it back up, or the sellers left the market after making profit here, and then the price returns back to this level, and again they look back, they check their phones, they think, okay, shit, we made money earlier, well, we can make money again. More sellers will get involved, and it's a continuation of that anyway. Again, we can see that happening here. We see that signaled here with that candle, and again, people join the sell, and we sell off immediately after. So you can see how crucial it is to be able to understand that. In this section, you will learn how to recognize the most important candlestick patterns, the psychology behind its formation, and what they do, or what do they indicate when they form in the market. Again, a lot of the candles that you'll learn in the Candlestick Bible are commonly repeated. If you go to the 1 minute, you can probably start counting loads and loads and loads of different candlestick patterns if you're familiar with them. And it's really important to be able to, it's a sentence. I like to refer to it as like, this is a language. This is like you're reading a book left to right. And if you can really read the candles, you can really understand what the market is telling us. Now, section 3, the most important. I don't know how long this video's been, but I'm going to have to cut it really short. I'm going to move on really quickly. But market structure, one of the most important sections. In this section, you'll learn how to identify trending markets, ranging markets, and choppy markets. These are our 3 conditions, and obviously trending markets is split into buying and selling trends. So 4 different conditions. You'll understand and you'll learn how these markets move and how to trade them professionally. Okay, this is a key word. Not like a retail trader, not like someone who's a gambler or really wants to just make a quick bag. You are trading professionally because you take the correct price action based off of the correct market structure. So this is probably the most important section of the book. So if you haven't yet read through the market structure section, please do. You'll also learn how to draw support and resistance lines. Now this for me is imperative. It's the most important thing. If you look at my charts, you can see most of the actions in which I take off trading are based off of price action at these support and resistance lines. Now we can see how they're drawn up, and history, like, it repeats itself. The sell on NAS last stream on Monday, straight off of a resistance line. We noticed it was there. We had that gravestone. We sold away. We retested it again, and we had another sell off. All for a support and resistance line from where prices rejected beforehand. Again, what we're saying with these red dots and where you could buy and sell at, so sells here at the top and buys here at the bottom, these are all off of resistance lines. We knew that key level of resistance also over here turns into support at that level. Simple. And this is really like, it will enhance your trading ability, your trading game so much, so quickly when you understand support and resistance, and also trend lines here. I missed trend lines out there, but again, trend lines is just for trending markets, so you wouldn't be using trend lines in a ranging market. But you can see this long-term trend line here on the hourly time frame, and see price respecting the increase. We'll see if we get this buy that's happening. I really think we're at a good section for that buy, and the trade that we placed Friday, if you're holding, which I am actually holding over the weekend, just because this is one of the key areas for us to be in a buy for the long term. If we do start competing with these highs, it's like almost 1,000 pips we could potentially be looking at if we exceed 12,500 and head towards the 13,000. So yeah, all comes off market structure, all comes off understanding how to trade these different types of markets, and to trade them professionally as well. So to not chase my money, not be a gambler, and to take correct price action in the right condition. So the time frames and top-down analysis, extremely important. A lot of people get confused when trading. You look at the 1 minute graph, you look at the 15, you look at the 30, then you go to the 2 hour, the 4 hour, then I don't know what the fuck you do, but some people seem to get lost, a bit confused. They've seen what's happening in the 1 minute, and it takes away the importance of knowing the real movement of the value. Like, what's the value actually doing? If you take the market condition in the highest of time frames at the top of the top down analysis, you will understand that yes, a lot of noise might be happening in the lower time frame, but maybe when it reaches a certain key level of support, or where it reaches a key level where you can see price turning around and does the correct price action interaction, you can back the long term, because you know that's the true condition of the market. I'm just waiting for the short term to get set up correctly for me to take the punt for the long term. So top down analysis is really key. Think of it like this: the higher the time frame, the bigger the picture, the more information that is being held in these candles. So if we look at the 1 hour right here, we can see the direction of this movement, how we've been buying up, and we get this swoop process back to test these highs, but it's a slightly higher high. We come back down to test the trend line again, and at this trend line in the long time frame here in the hour, we could see price being respected by this support level, and pushing up. Now in the highest of time frames, this is the hour, so if we went even higher, we go to the month. What does the monthly look like? Oh shit, we got to zoom out. We have to zoom out. Just know that this is an extremely bullish market, really and truly. NAS is very bullish, but on a slow, consistent buying trend that we've drawn out for a while on NAS, we still have a lot of room to test back down. We've bought up quite rapidly, and you can see we're in bullish trend. No one can look at this chart and tell me that NAS is not in a bullish trend. So when we understand that, yes, sells are very likely, especially when we get this much distance between the value and the trend line. That's a lot of distance. And when we're thinking of like key levels or swing points for a long-term bullish trend, we could even be looking at levels down here. And now that is important for me to take into next week. If we do get a huge sell-off after the formation that we've got right here, but we do have pin bars. This is what we're saying. This is all suggestive to buy momentum. Yes, for this month so far, the month of October, we've tested up and we've rejected all the way from the tops, and we're down here, but we've now on the way to recovering back up towards it. So the highest of time frames, I'm thinking, well, if it's really a bullish market and we're going to continue this bullish push upwards, well then I'm going to be back in sell or buys in the lower time frame when they show themselves. When price reveals itself for a buy on a key level, I will back it, because I know that the highest of time frames NAS likes to buy. It's in a bullish trend. What I would look out for, just a quick advice, this won't be relevant if you're watching the video back later at a stage, but at this point here, when we do have this much distance between the value itself and the actual trend line, and the gradient at which NAS was increasing steadily, you see, it's quite a steady pace, and then we have that sudden change, that sharp burst upwards. So it is open and due some retracement after. This is almost an impulse. And then after our impulses, we do get these retracement periods where we've seen them here in NAS. We get those sell periods, retracement. So big retracement here, huge retracement here. We could even see something like this up here down to test this level before we buy up on the eventual. So top-down analysis, seriously important. Multiple time frame analysis is very important for you as a price action trader. Now this is what I was saying, the price action you take in a lower time frame is probably a decision you've been waiting to make because of what a higher time frame was telling you. So if the daily was saying it was a buy, but in the 1 minute we were still selling down, maybe on the 1 minute I'll wait till it sells down to a key level of support, form some correct price action. Maybe then on the 15 minute we also get some price action, maybe get a wick away from that zone. Now I'm confident to back the long term buying trend. If that makes sense, I hope it does. If it doesn't, reach out to me, personal message me, whatever, we'll clear it up. Hugely important. In this section you will learn how to analyze the market using that. So again, read over this section, understand, find your compass in terms of time and relativeness to what you're trading. It's always helpful, and before every week of trading I'll always check the monthly, I'll always check the daily, I'll always check the weekly. The daily is checked every day, of course. The weekly is checked pretty much every day in the intraday trading week. The monthly is always checked at the start of the week for me. We go to the monthly real quick, we look at it, this point here, the highest of points. Well, on the daily, sorry, not the 1 hour, on the daily, that is this point here. So that we sold off quickly from this point, so this is all a wick right now. We can see that on the monthly. So we can see that all of that is a wick right now, because we're no longer there. We were there on the daily, we were there a couple of days ago, well, a week ago or whatever. We're not there now. So price has had its retracement movement, and if you look, it kind of is to what would be considered a swing point or a level of decent support. If it's going to do that long-term sell in the monthly, what I was talking about, because of the distance between it and where the long-term swing point might be, or even at this box here, then we could see price sell down, breaking through these levels of support, even though they've held us quite nicely, and eventually touch this before it does decide to go on. So these are the things that top-down analysis will open up to me. Without looking at the monthly, I wouldn't even be thinking that, really and truly. You could look at maybe the 4 hour or the hour, something that you'd look at in the day, and get completely the wrong interpretation from this, get the understanding that we haven't broke this level for so long, so we should just buy, bro. And then if lo and behold this breaks, this level of support breaks, we could end up testing down to here. And I wouldn't be looking for that. Well, I mean, I guess you would. I'm gonna stop capping. The only reason I would think that is because, again, lower lows. So we go from the high here, and then, sorry, not low lows, lower highs. So this is our high, lower high. This should sell down further than our last low. But yeah, like I said, sometimes they can conflict. If you look at this 4 hour, you could suggest it is selling, and you look at the monthly and be like, well, Cees, you were saying the monthly was a straight bullish market, but like we said, the position we are in this bullish trend is impulse, at the end of impulse. So surely after the end of impulse we should see some retracement. Check it on the weekly as well, it'll give you more of a clearer view. Now maybe on the weekly we can say, well, that is that swing point, really. Yeah, if we see there's our impulse that comes down from here. This is a huge impulse, by the way. Huge impulse. Huge impulse to here, slight retracement movement. Again, it's not even massive, but it does create that swing point. So then we impulse again after the retracement down to here. If we draw a path, it's probably going to be the easiest thing. I know I wanted to make this video quick, but it's just not possible. It's just not possible. So we come all the way to here, we retrace back down to here, and we impulse again. So now we retrace back to that point. We see it's level, swing point, and now what I'm looking to trade is the long-term buy upwards. I didn't mean to delete that, but I hope you guys saw that pattern and understood what we're talking about. Yeah. So top-down analysis. Make sure you guys make sure you're on top of that. It has to be done every single day. Should be part of your routine just as a trader alone. So number 5, trading strategies and tactics. Now this section, number 5, is going to be after you've consumed all of the knowledge, you start really understanding the market, how it moves, price action, what candlesticks are telling you, when to enter trades because of that, and how to trade certain market conditions and also understand them in terms of time frame. So now 5 and 6 will be more so your approach to trading, how to take action on that, how to actually make market execution, where to place pending orders, those kinds of things. I don't even think pending orders is truly in there. I'll go over pending orders at some point. But how to take action on the information that you've just learned is going to be 5 and 6. So the end of the book is really where the gold mine, the gems are. That's where it is. But you've got to know the information at the start of the book before you get to the gold mine. So when we get to this section, we can say in this section, you will learn how to trade the market using 4 price action strategies. Now, I don't trade these strategies religiously. I actually have used what these are and incorporated them into my own approach. So the pin bar strategy, the engulfing bar strategy, the inside bar strategy, the inside bar false breakout strategy, and a few trade examples. Now, these are pretty much, for me, just simple price action. It is all categorized under price action. The pin bar strategy is taking action, taking a market execution off of a pin bar in a certain scenario. So if it's off a pin bar after we've broken the level of resistance and we've retested back towards it, then we pin bar away from it. That is price action for me. I'm going to take a buy from there because we are breaking out of range to the upside and forming a pin bar off of that key level, which is now suggesting to me that we've exceeded that resistance. Now it's turned to support. Now we're going to bounce off it and impulse upwards. Again, same thing with the engulfing. If it engulfs at the bottom of a resistance line, I'm going to take the buy to the top of resistance in a range of market. So it really and truly will just highlight those moments in the market and how it suggests to take action on them. But it is one of the most important sections of the book for sure. I highly recommend that you master the previous sections before jumping to this section, because if you don't master the basics, you will not be able to use these strategies as effective as they should be. I know that says would be, but as it should be. And yeah, like I was saying, this isn't lying. This is for everyone that likes to cut corners. Please just don't. There's just no cutting corners in this. You need to know your shit in this market. It does not take a single prisoner. It don't care. It doesn't care. It will just X you off. Your account is blown if you make silly mistakes, and the market has no remorse for you. So really take in the information before you take to this part of the book. In this section, you'll also learn how to identify high probability setups in the market and how to use the candlestick patterns in trending markets and ranging markets to maximize your profits, which is all that we want. As intraday traders, we have setups every single day in different markets with these conditions, and if we know truly how to look and find a high probability setup, well, then we limit our risk immediately just off of the way that we analyze. I used to be a trader. I was almost like a trading fiend. I just wanted to trade. I wanted to call something and be right, and it led me to overtrade. It led me to make silly decisions. It led me to take markets that weren't good setups. It wasn't really clear. It wasn't the right time to enter, and all these things that you learn along the way will eliminate those, and eventually you'll start getting that execution down. And this part of the book really helped me with that, to kind of understand, okay, why am I taking a trade if the setup isn't right? If the setup is right and my probabilities are low, well, that's when I want to put my money on the line. If I don't have a setup and I just think it's buying, and I've got a hunch, or someone said it in the chat, and I just think, okay, cool, today I'm just feeling like making some money, please let me make some money, that is a prayer. You are putting out a prayer, and the market will slap you if you're wrong. So don't put out prayers. Know what you're praying, and learn it, and come to this section of the book and make sure you've got those strategies in the back of your mind. Once you've got the price action down, I promise you to a T. A lot of this is just a bit, It's just it talks a lot, because I don't even use the same indicators as this book, but the perception it gives on setups and how to trade them is massively important. The biggest of them all, section 6, money management. In this section you will learn how to create a money management and risk control plan that will allow you to protect your capital and become a consistently profitable trader. So, big word, protect. Huge word, huge word. I came into trading and it was just all offense for me. If I lost a trade, I was winning one bigger. And that just led me to have an approach that wasn't protecting my capital. And I had a phase where I was just so confused. I knew how to trade. Like I knew how to trade. I knew I understood price action. I knew I could identify market condition. I knew I could see markets structure, recognize patterns, and see good setups. I could use pivots to get the range of the market. I could use all these tools, harmonic scanners, but I couldn't seem to stay profitable. And until I really took the time out to concentrate on my trading plan and how I actually attack the market and defend my capital, I wasn't consistent and I wasn't profitable. So you have to be in an understanding of this is a lot more defense or defense than it is attacking. So if I'm actually, like, when I'm saying this, I mean defense comes first, because before I place a trade, I already know the boundaries in which I'm accepting the market can go. So I'm already thinking about, okay, if it goes this far down, well, my stop loss is covering that, because I know if it breaks away from this value, goes below this value, it's going to break this market structure, which means the bullish trend is no longer valid, etc. In those situations, I'm already thinking defense before I place the trade. And protect is a key word for that, because you should be all knowing of your trade. You should know every intention of it. You should know why the stop loss is here. You should know why you take profits all the way over here. And if you can't state those three things, if you can't state why you've entered where you've entered, why your stop loss is where it is, and why your take profit is where it is, you do not know why you're placing this trade, and you need to trade with intention, because otherwise you will get lost. And the number one thing that happens when you're in the market and money's actually on the line and you're lost is panic. And a trader that panics, unfortunately, will never prosper. You really have to be in control of yourself and your trading plan. You know what, I said at the start of this video this was going to be a quick video. I guess I just like to talk, but I hope that gave a breakdown for the Candlestick Bible. I didn't want to go page by page by it. I just kind of wanted to summarize it and what it will do for you, and how important some of these areas are, and try to give you some kind of examples of how it will help you. But seriously, I've said it so many times and I can't express it enough. Like, seriously, read the book. I know there's so many people out there that are just saying, yeah, I've read the Candlestick Bible. You haven't read it. You haven't read it. You haven't. And you haven't gone and applied it. You haven't applied the knowledge, read back, gone and took notes, then gone and done some back testing, took notes again, then read the book one more time. Like, you gotta live by this, bro. This will change your life, and that's as serious as it gets. This book changed everything for me. So I truly hope you guys can go and take this knowledge in, and we'll have some chats about it. If anyone has any concerns about the Candlestick Trading Bible, message me in the Discord in the education section about Candlestick Bibles, and we can talk. I'll talk all day about the Candlestick Bible, so if you've got any questions, throw them in there. Again, I hope this video helped, and if you don't have a copy of the Candlestick Bible, it will be in the Discord anyway. I'm gonna upload it after this video. So yeah, if you're watching this on the YouTube, subscribe and drop a like for me. We're gonna start, I think, potentially moving the stream over here to YouTube, but for now we're on Twitch. So if you haven't already, go follow me on Twitch. I'll put that link in the bio. We stream every Monday, Wednesday, and Friday at 2 p.m, 2:30 p.m, roughly when the New York session begins for the trading, for traders. And yeah, we'll probably throw in some bits and bobs in the week. I might even add another session in there due to demand. But yeah, tomorrow, it's Sunday right now, so I'm kind of just going to do some analysis. And tomorrow the market opens, or tonight the market opens. I don't really trade on Sundays, so I would normally wait till Monday morning. But yeah, thank you for listening, and I hope you read the book. Just fucking read the book. You know what I mean? Nothing more to say.